Joining us now, our good friend, market watcher Dennis Gartman. Dennis, seems like the market wants it all, as it always does, right? It wants a great economy, it wants that trade deal with China. And oh, yes, what about the Fed cutting rates? We'll take that as well.
Well, the odds of a Fed rate cut have gone down rather dramatically in the course of the last 54 hours or so, given the numbers on Friday. Walking in last week, it was interesting to me that the consensus was there would be at least 3 rate cuts before the end of the year. Certainly there would be 2. Now, after the jobs numbers on Friday and listening to what the president of the Cleveland Fed had to say on another television station this morning, the propensity for a rate cut has obviously been diminished. However, we are at extraordinarily low levels of Fed funds. We're at extraordinarily low levels of the 2-year, the 5-year, the 10-year, the 30-year bond. How much lower can rates go? Are low rates really the driving force? And can you actually have a bull market in stocks with interest rates going higher? And the answer is yes, you still can.
Well, and it's funny because Morgan Stanley says weaker growth, they believe, will offset whatever the Fed does if it indeed comes back with a rate cut maybe by the end of this month. So Morgan Stanley says sell stocks right now because growth is going to be hard to achieve.
It will be very difficult to replicate 3% GDP growth again for the next year. That's almost a given. That's not going to happen. You can't continue the kind of growth that we've had for the past year and a half for ad infinitum into the future. But can we have modest growth? Yes. Am I bullish of stocks? Well, I've tried several times in the course of the past year to be bearish of stocks. That's proven to be utterly ill-advised and unprofitable. So the trend is clearly from the lower left to the upper right. We will walk in one of these days, and you were talking earlier on about the big one in California. Well, the way this bear market or the way the bull market will end, we'll walk in one day, and there will be some geopolitical circumstance that has occurred, some natural circumstance that has occurred. The Dow will open 500 points higher, the S&P will open 50 points lower, and at that point you have to say the bull market has ended. But until then, it's still a bull market. Until then, weakness is to be bought. But I got to tell you, after last week's earthquakes in California that were rather consistent, my antennae are up.
Well, we have been warned. Or at least we're, ready for something. But Dennis, given that, where else does the money go? And what are you buying right now? What areas do you like in this environment?
The one thing that I've been buying now, remember, I trade only for my own account. It's my money. I have my money at risk every day. And what I've been buying for the past several months are high-yielding corporate debt securities that have been moving from the lower left to the upper right. They've been paying me monthly dividends on a very consistent basis, 7, 8, 9, 10% on some of them. Yes, I have risk. There's not a question about it. But when you're being paid on a consistent basis with instruments that are extremely liquid so that you can get out at any one time, quite honestly, that's the only place that I'm putting my money right now. I own a fair amount of gold. And have owned gold for several years, and I was very impressed by what gold did on Friday. Even though it broke hard, it rallied hard off the bottom, and here we walk in this morning, and it's trading better. So owning bonds and owning gold seems to me to be the proper place to be.
All right. We have listened to you, Dennis Gartman. Your antenna are up right now. We can't see them, but we believe you. Dennis, thank you very much. Appreciate your time this morning.